Hi, welcome. It's Mary Ellen McGonagle here with your weekly Edge show for Saturday, February 5th. Let's take a look at what we are going to be covering in today's show. I will be sharing with you some of the more impactful news that drove price action last week. It was a super volatile period and help you get your arms around what it is taking place and what's really having the most in the way of an impact on the markets as well as individual stocks. And then from there, we'll take a look at the current markets. Where did we close? A lot of people feel that we are still in the throes of a bear market. I'll go ahead and share my insights. And then viewer question of the week, and it has everything to do with interest rates being on the rise and where one could seek not only safety but price appreciation in select stocks. So I'll share that toward the end. From here, let's go ahead and take a look at some of those more impactful news. And this is a rather crowded looking slide, but it is providing us with an earnings report calendar, and it's from last week. These are the companies that are the most closely watched, widely followed, and they did come out with numbers, and it really was one of the more impactful events last week. Some of the companies we can see that reported, PayPal, well-known, came out, plummeted 20%. Wednesday was a very big day. We did see Meta, formerly known as Facebook, another stock that dropped over 20% after their miss on Q4 earnings and guiding lower. That had a real impact on the broader markets as well. Qualcomm, a well-known semiconductor stock, came out with strong numbers and guided higher. That stock did well. So in essence, what I am sharing with you is really how important it is during these next couple of weeks to pay attention to earnings. AMD, another big semiconductor stock, came out with good numbers, traded higher, helped other semiconductor stocks. So not only are these individual stocks being impacted, they're impacting their group or sector that they're a part of, as well as the broader market. And as we move on, I will share further insights relating to this. Other news that really hit the markets and had a big impact was Friday's news that the U.S. added 467,000 new jobs in January. This is much higher than was anticipated. There was thinking that the Omicron variant really was going to lower this number. So it in turn had a big impact. So I'll share with you what area was very strongly impacted. But let's take a look at one area that today on Friday, I'm recording this, did have a big pop, and that is the yield on the 10-year Treasury. This is a view. We can see it was up 5.6% today. And the reason here is that the strong jobs report had money flowing back into the stock market, a lot of it coming out of bonds. So in turn, we did see a spike in that yield. So from here, let's go ahead and take a look. Where did the markets close for the week? And first up, we're looking at a daily price chart of the S&P 500. And the S&P 500, similar to other broader market indices, had a really strong rally going into that midweek. And then after the close on Wednesday was that Facebook earnings release that really pulled the markets down into the end of the week so that we were up about 2%. So let's just take a look at the technicals relating to what occurred. In particular, the S&P was able to close the week above this blue 200-day simple moving average. So certainly that's constructive. We can also take a look at these outside momentum indicators, the RSI, relative strength indicator. It did close in negative territory below that 50. And then we can see the stochastics. This is a faster moving momentum indicator, and it closes in positive territory above that 50. So mixed on those momentum indicators. However, near-term price action is not constructive. We just have this close below this 21-day simple moving average, which can act as further upside resistance. So there are pockets of strength and areas I will share with you that look constructive. However, I would tread lightly as volatility not only remains high, but this daily price chart of the S&P 500 is showing a mixed outlook over the near term. Let's take a look at the Nasdaq, another widely followed important index, of course, tech heavy, and we can see also mixed in the way of signals. The RSI still in negative territory here, and then the stochastics just up here in positive territory above that 50, so mixed. The index did close the week above that 10-day. That certainly is constructive, but we still have quite a bit of work to do to get back into positive territory, so mixed on the Nasdaq as well. But let's go ahead and drill down further. We want to take a look at the underlying sectors in the S&P 500 on the prowl for that relative outperformance. Where is money flowing in? Because the indexes were up, S&P up 2%, Nasdaq up 2.6%. Where is that strength? So this is a 2-month daily price chart of the 11 sectors in the S&P 500. I've added an RSI, relative strength indicator. I'm going to go ahead and update that because what we want to be on the lookout for is strength in this upper quartile relative to areas that are weaker. So first up, we can see energy, and this is another strong week, up 5%. And as we move forward, I'll share with you the dynamic that is helping to push these energy stocks higher, actually two dynamics. But let's take a look. This is interesting to me because it is the financial sector. This area had hit a new high going into this year and then fell in line with the broader markets. But this week we are seeing a nice downtrend reversal. We can see on the daily chart here higher lows. The outside RSI momentum indicator is up above 50 in positive territory, and we're getting this nice MACD moving average convergence divergence, black line up through the red. That is a signal that this downtrend is reversing. And then most importantly is the close above each of these simple moving averages, and that's constructive. We want to see that. As we move forward, I'll share dynamics that are pushing financial stocks higher. And then from here, we want to take a look at some of the other larger, more impactful sectors in the market. Here we are with technology. XLK is the ticker symbol, and we had a nice reversal. Certainly at midweek with XLK, the RSI was positive. We also had stochastics that were positive and a break above that 21. And unfortunately, that Facebook drop did really impact other areas. I'll share those with you into the close of the week. So also very uncertain on the near-term outlook for technology. And then down in these weaker areas, making sure you're not overweighted. XLB is materials, and this area was anticipated to do well. We are in a period where metals and other material stocks fare well, higher inflation and higher interest rates, however, fell out of bed into the close. I'll share with you why. And again, making sure that you're not in some of those metals and other commodity related areas outside of energy, of course. So let's take a look at some of the sub-industry groupings that I follow. I do traffic in higher growth stocks, but I have ETFs that are representing many different areas of the market. Up here we can see Brent crude pricing closing the week above 90. Very bullish for those energy stocks. So here we are with another highly impactful chart. I did share this with you already. This is that TNX, that yield on the 10-year. Let's go ahead and take a quick peek here at volatility, because we did Thursday and Friday see a lot in the way of intraday price swings, not only in the market, but also in individual stocks. And this is also known as the fear index. And we can see that it did spike back here into the end of January. We did have a nice pullback here recently that was very encouraging. However, that price action later this week is pushing the VIX up a little bit higher. We closed the week at about 24. The average on that volatility index is 12, but generally from my work, anything above 18 on that VIX is indicating heightened fear, which unfortunately will keep volatility at a relatively elevated level until things settle down further. So from here, we want to, of course, also take a look at those weaker areas. Small cap stocks still struggling, up 1.6% for the week, but generally downtrending. And then as it relates to areas that are trying to turn, I did want to share with you software stocks still very down and out. This is IGV software ETF and attempting to reverse. I think we will get more signals next week. Some widely watched software stocks are due to report earnings, and ideally we are on the prowl for this period here to be bottoming. This is a daily chart. We are seeing higher lows, and eventually we're going to be on the lookout for this index to be trading higher with the moving averages trending upward. So we certainly have work, but it's an area worth following because when software stocks get going, these high growth names can really outperform. And then let's take a look at one other area that certainly I cover closely and you might want to be tuned into our semiconductor stocks, another high growth area, very, very mixed, volatile, all about earnings. And we can see that at this point in time, not particularly constructive. So that's a look at the broader markets and then a look even deeper behind that to see what is driving price action. I did want to share one other area with you, and it's not listed here, so we will come over and I wanted to have you take a look at this regional bank index, KRE, and this is all about that financial group trending higher, and we're seeing nice vibrancy in these bank stocks, which leads us right into this viewer question of the week. As far as areas that are firming up and are due to continue to outperform in this higher interest rate area, and it is a leading bank stock. Comerica is the ticker symbol, CMA, and the stock was on my MEM Edge report suggested holdings list going into the beginning of this year as bank stocks were reporting strong numbers and then also guiding higher in the light of higher interest rates. Fell out of bed with the markets, but we can see CMA is now trading above each of its shorter term simple moving averages. We have this RSI in positive territory. I'm on the lookout for a crossover of this MACD. If we can get that black line up through the red, signaling that this pullback period has ended, we're entering a new uptrend, I would put this as a strong buy. Another area that fares well in a rising interest rate period are insurance stocks. Certainly not those big growthier areas that I tend to lean toward, but worth noting because insurance stocks are relatively defensive. There is going to be a need for insurance regardless of what may be occurring in the economy and elsewhere. As premiums on their policies come in, they do invest them in bonds, so higher yields will help their bottom lines. So this is Chubb Limited. CB is the ticker symbol. They are the largest property and casualty insurer, and the stock gapped up this week on very strong earnings, 20% year-over-year earnings growth, and then also 15% above estimates. Take a look at that volume on that gap up. Base breakout does not look at all like the broader markets. You can see that relative outperformance, and the stock has been touted by several large Wall Street firms as a long-term buy and hold into the next 2 years. There's anticipation that this company will and other insurers continue to grow. One other area to note as it relates to these insurance companies, they often offer a high yield to investors, which is also constructive during high inflation periods. And lastly, the primary reason for this strong growth is these insurance companies have been able to raise their premiums with not a whole lot in the way of pushback. One other stock that we can look at here in the insurance area is a well-known company. This is Aflac, AFL. This company reported their earnings last week on Wednesday, and they reported 24% 4% year-over-year earnings growth, 5% above estimates. And we can see the stock had a nice base breakout to new highs on that earnings report. We're looking out here at this MACD, potentially crossing above black line up through the red in bullish price action. So the stock appears to be in a very nice confirmed uptrend. I'm going to leave it at that. Everyone have a wonderful weekend. If you haven't already, use that button below to trial my MEM Edge report. It's all about getting you in front of rotation, as well as revealing what is taking place within these markets. I alert you when the markets turn positive so that you can put more money to work in these stronger areas, as well as individual stock picks. We've been on top of this move into energy since the beginning of January, and it continues to look quite constructive. See you next week. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.